Hello everybody, welcome to the technical analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As always, keep in mind there's risk involved with each trade that you take. No one trade is guaranteed to profit, so you want to manage risk in a way that makes sense for you. And we'll go over some ideas in that regard in today's session if we get a chance to simulate some trades. We've got some nice tools within our order window in our web trader and mobile app that really make the risk management side of things easier. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can access our web trader platform. This allows you to trade on MT4 and MT5 accounts from one location with our advanced tools and functionalities. You also can trade with those same tools and functionalities from our mobile app, which is found in the major app stores and has the same ability to see signals and use the technical analysis tools and fundamental analysis tools that we're about to take a look at, some of those now within the web trader. And so to access the web trader, you log in the upper right corner here, and you'll find yourself in this platform that we're looking at now. So today being a technical analysis webinar, we will focus quite a bit on technical analysis, but I think it makes sense to talk a little bit about the fundamental news situation currently before jumping into the technical analysis. Some major things to consider. One is that from a sentiment perspective, there seems to be a bit of positive momentum on the markets right now with the equities, on the major indices and the stocks in general. But there also is some fear out there about the war situation in the Middle East, how that could potentially escalate further than it already has. And so, you know, certain instruments, in particular, like crude oil and perhaps gold as a safe haven, and the equities could be quite reactive to anything unexpected happening in that regard. Now, also from the economic perspective, the U.S. has some folks speaking today from the FOMC committee about policy and such, and then also a bit later in about 2 hours' time, the FOMC meeting minutes will be released. And for anyone who's unfamiliar, the FOMC committee, basically they're the group that talks about monetary policy and makes monetary decisions along with Jerome Powell in the US. And so with the recent rate hike that occurred in the US and the anticipation, or I'm sorry, rate cut that occurred in the US, which was a larger rate cut than many expected, a half a point rate cut rather than a quarter. With that having occurred and creating positive momentum on the markets a bit with that cut, it'll be interesting to see what's in the meeting minutes from the FOMC committee, as those minutes are released a bit later on this evening. And so I think some of the positive momentum today on the equities is surrounding that, particularly out of the U.S. And you know, there's been some negative energy coming out of the China situation with stimulus that maybe was a bit disappointing in the size of stimulus that China initiated recently, and so there actually was some negative momentum from that earlier in the day. I suspect we'll see a bit of bouncing around because of the FOMC meeting minutes that are released. There probably will be some apprehension about lowering interest rates too fast because you don't want inflation to come rushing back with you know, too quick of a lowering of interest rates. And so we'll keep an eye on that, fundamentally speaking, and expect some volatility this evening, perhaps from that information that's coming out, and obviously keeping an eye on what's happening in the Middle East as well with regard to the war situation. Now, what we could do is take a look at some instruments that in particular have been moving quite a bit. And you know, we've got signals on these major US indices And pretty much all of them, I believe, were buy signals that already came to fruition. And so we see here the US 500 tells you the market has already reached the key level. It was a buy signal, and it already broke through the take profit zone. These two green lines were the suggested spot maybe to take profit, and it already broke through both of those lines and seems to be pulling back now, leading up to the minutes release from the FOMC. So why would the take profit area be suggested here on the technical signal? Because there's resistance in that area. And so if we then want to take a look at the US 500, and we could do that. So if let's say we're taking a look at maybe a buy or a sell opportunity, depending on what we see from a technical perspective, then we'd probably want to expand the chart. Let's get the chart up on the US 500. If the chart will load for me, let's try it again. Maybe we'll just leave the trade area a second. I apologize. Sometimes my Wi-Fi where I'm operating from is a little touchy. Let's search from this location. We'll bring up the US 500, and now we've got the chart. Okay, was being a little sensitive for me, but we've got it. Okay, so what we can do is maybe look at a little larger perspective. We see here's the signal to buy, and really it made sense from a technical perspective. When the US 500 broke this resistance here, we see the resistance line drawn. Resistance, resistance, the price falling down, resistance, the price falling down. And then we see once it breaks through that resistance, it just surged with what we call a breakthrough candle. Okay, going right through the take profit zone on that technical signal. And so now what we look at from the larger perspective, and if we go to maybe 1 day candles, 1 week candles, we can start to see where do we see resistance? Are we at all-time highs? And what we see is we are past the resistance level on the 1 day candles, which was here. Okay, and the pullback then is coming towards the only support level that's near it, which was the resistance level that just got broke. Okay, so as we then look at this, we can start to think about a couple things. There's a major hurricane, and I forgot to mention that in the opening. It's a major hurricane headed towards the coast in Florida, expected to make landfall in the next, I don't know, 12 to 18 hours, something like that. And it's the highest category hurricane you can have, category 5, and they're expecting maybe, I don't know, 10 to 15 feet, storm surge that could inundate the coastline up and down the west coast of Florida in many spots. The U.S. reports things in feet. We could say maybe 4 or 5 meters, something like that, of storm surge, and that's not counting the waves and the wind and the potential tornadoes and that. So after the huge impact that the recent Hurricane Helene made on the east coast of the United States, now we've got this next major hurricane directly impacting Florida soon. And so this is creating some fear about adding to economic stress in the U.S. that many in the U.S. have been feeling with maxed out credit. Really, the use of credit in the U.S. is near or at all-time highs. And the interest rates, although the FOMC committee started lowering interest rates recently in the U.S., interest rates are still relatively high, and credit isn't easy to come by for many folks. And so that's creating a bit of fear in the U.S. along with the Middle East situation. The FOMC minutes being released, if they mention anything about fear of inflation coming back with lowering interest rates too quickly, you could have kind of a perfect storm effect here where there are multiple reasons for a pullback after this large rise on the equities, particularly the US equities. And so if you're looking at it from that perspective and you're trying to be opportunistic, getting a stop loss above the all-time high up here, above that line that I just drew, if you're looking to short the market for a short-term potential pullback with multiple reasons for potential fear, maybe that makes sense now that this buy signal already reached the main take profit zone and seems to be pulling back now in the short term. And so if you were taking the perspective that maybe the momentum is slowed, we go to the smaller candles and we start to look to see, is there a downtrend in the short term? And it just looks like could be a temporary reversal, but from a technical perspective, and perhaps from a fundamental perspective, there are some reasons for this momentum to be short-lived today with a pullback. You could set up a scenario where if you wanted to short this, technically it could be quite opportunistic. And so let's take that perspective that the buy signal, if you already acted on that, you'd already be in the profit on that buy move. Now maybe you'd be looking potentially to see if it's an opportunistic spot to sell. And so if I get my stop loss above this high up here, I would just need to be at 58.40 or higher. So let me say 58.45 or 58.50. 58,500. 58.50. Okay, 0.0, not 500. Okay, and take profit. Where would be the support level where this might pull back to? And we're looking at 5-minute candles here. Again, this is kind of a short-term move. We see that this is where the big surge went up, and many times the faster something rises, the more likely it is to pull back, at least in the short term. Not always, but many times. So it doesn't really have to break any major support levels to get back down around 5,800. Okay, this is where it really started to surge up when it broke past this price. So if I'm putting a take profit at 58.05, it doesn't have to really break any major price levels to reach my target take profit. My stop loss then is half the risk approximately compared to my possible profit, to my take profit. And you see how this risk manages then for us with stop loss up here, 58.50 as an example price. Okay, I've given myself quite a distance, some leeway that even if it does come back up, I don't hit my stop loss even if it breaks this high, unless it hits 58.50. And my take profit is before having to break below this support level down here. And I still have better potential profit, almost 2 to 1 or about 2 to 1 compared to risk. Okay, so that's what I mean by a technical perspective, that it is opportunistic. Now I just need to change my trade size to be the amount of risk that I'm looking for. So a quarter of a lot would risk about 400. Half a lot would risk 787. So I can zero in on the amount that I want to risk with my trade size. And this gets me to about 1% risk with this trade size. Okay, 58,000, around 580 would be about 1%. Okay, it's moving by the second because the price is moving. But I can zero in on the amount of risk that I want and then easily make my move, going after over 1,000 profit in this example, risking around 1% to make near 2% or around 2% on the move. Okay, and this is the original chart where I drew my lines, but if I want to go to where the trade is running, you'll see your entry price, you'll see all of the information related to how you set this trade up right here on the chart. So, and if I want to go full screen, Now I can see my stop loss up here. I can see my entry price here, open price, and I see my take profit line on the chart. And by the way, you can drag these. So if I decide I want this closer and I say, you know what, I don't want to risk that far up, maybe I only need my stop loss just above today's high, no problem. I've just adjusted my stop loss simply by dragging the line down. So now I'm risking much less, okay? I can do the same with my take profit. I can drag it up, down, move it to wherever I want. Maybe I decide I want my take profit just a little higher to get above this little support area here, okay? So I can fine tune where I want these as the trade is running, no problem, okay? So this is something that makes it simple to adjust your risk management, and you can see all the new settings. As if you want to see it in written form, you just go to the info on the trade, and you've got this here with your stop loss, take profit, all the information on this trade here, and you can edit the position manually as well. Okay, I can go in and type the stop loss and take profit if I want to adjust it, or I can drag it on the chart. Okay, so very useful tools. Along with the signals and other things to be able to make it easy to manage your trade, to number one, risk management, like we did, calculating the exposure and such, but also then to make adjustments on the fly as the trade is running. Okay, so what else might we take a look at? We could go to maybe currencies. Euro USD makes sense with a lot of news coming out of the US right now this evening. And so as we look at the Euro USD, there is a signal on that. It is a sell signal. It has not reached the take profit yet, but we see it is downtrending a bit, and perhaps it'll reach. If the FOMC committee, talks a little bit dovish about further rate hikes, maybe they're worried about inflation coming back, and they think the economy is pretty strong, and maybe they don't need to lower the rates so quickly. I don't think they'll raise rates, but maybe they'll talk a bit dovish about further rate cuts. And if that was the case, maybe we'd see the USD strengthen even more rapidly and head towards a successful signal here on the Euro USD. The signal says drop, so that would mean USD strengthening against the Euro. This is one that has not come to fruition yet. So if you were interested in acting on this signal, it hasn't reached the take profit yet. It does seem to be trying to downtrend as the signal predicts. Let's go to larger candles. And so we see this was a support level here that broke today. Okay, on the 2-hour candle. So this was, by support, I mean the price hit and went back up. This was last week. Then the price hit this week, went right from the same price, bounced back up. It tested again, bounced back up. Now, only in the past few hours, it broke that support level. Okay, so this is an active downtrend, and that's where this signal comes from. Here's the support level, the blue line. Okay, that's the current price right at the support level or just below. And so that's this price right here. The live price is right at the old support that broke, and now it's acting as resistance, having trouble going back above because it broke below the support. So broken support here acts as resistance now as this tries to go back up. The question is, will it pop back above and climb up and it'll be a failed signal? Or will it continue down? So if you were going to sell on this, it would make sense. You'd put your stop loss back above this broken support. If it breaks back above, you get out. If it continues to drop, then maybe you have a successful signal here. Okay, so if you were going to go with this signal, it would be a sell. That's what the signal was suggesting. Take profit could be down a bit lower. Let's go to maybe 1-day candles. Okay, where would my take profit be? I see here a support level on the 1-day candles. Okay, this was support, 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 and then went up. Okay, so if this is going to drop clean and clear. It looks like it's got no support till it reaches around $1.911, $9.12, something like that. So if I'm saying take profit, $9.12, that's down here near this support level on the one-day candles. And stop loss back above what we saw was the broken support on the 2-hour candles. So stop loss could be back up here. If it gets up around 109.58, maybe 109.60, that means it's uptrending. It means it reversed back above this broken support if it comes back up here. Okay, and we can maybe see it better if we look at smaller candles, 15-minute. So I'm saying if it comes back up above this area all the way up to 109.58 or 109.60, then that would be a technical uptrend again. Okay, so stop loss 109.60 would give me an uptrend, and I might question whether I want to stick with a sell at that point. I can see this is a pretty opportunistic entry point with better than 2-to-1, maybe 3-to-1 possible profit to risk. Okay, I just need a trade size that gets to where it's the amount that I would want to risk. Maybe 4 lots. That would give me just over 500 risk. That's less than 1% risk on the account to go after nearly 3% potential profit. Okay, so you can see how the tools help me risk manage after I've got my technical analysis aligned and I take the move. Now this is in the direction of the technical signal that we looked at. Those signals come from analysts at Trading Central. We are in the direction of the technical trend. This is a downtrend. We can see it broke the support level. And if we want to draw lines to show the downtrend, it's pretty simple to do. Let's go to maybe 30-minute candles and we'll draw the downtrend that we see. Okay, just like this. High points are getting lower. High point, low point, high point, low point, high point, low point, high point, low point. High points are getting lower. It's a downtrend. Also, low points are getting lower. Okay, so we can see this is a little channel, a downward trending channel that's getting lower high points and lower low points each time it goes up and down. Okay, so this is a nice technical downtrend that has not broken out of the downtrend. If it does, it'll hit our stop loss. If it comes back up and hits 108.60, it just made a higher high point. Okay, it would break out of this downward channel if it came up here. Okay, so this is where you maybe start to decide whether you feel it's still a downtrend, whether you think you want to trade in that direction, and where to put your stop loss with this sort of analysis. And we saw on the technical signal, it's still a live sell signal. And then we kind of think about the fundamentals a bit, and they're at least neutral. I don't think the fundamental news right now is working against the USD strengthening. USD tends to be a safe haven when there's fear. Right now, there's fear of war. There's fear of a major hurricane. If people sell the equities with that fear, if the stock market pushes back down after surging today, naturally as US stocks are sold, that creates a buy back into the USD as the base currency. So there are multiple reasons why the USD could strengthen beyond the technical analysis that we saw from the technical signal, which also says sell. Okay, so this is kind of how I like to simulate deciding whether to follow a technical signal. In this case, it was a sell on the Euro USD, and deciding whether the fundamental news is at least neutral if you go with that signal, or better yet, in the direction of the technical signal. Are there fundamental reasons for the Euro USD to drop along with the technical trend that's in that direction? And if the answer to that is yes, then it's easier to follow that signal. Okay, I feel like the answer to that is more yes than no. There's more reason, I think, for the USD to strengthen right now then weaken. The U.S. announcements have been better than expected of late. There's more reason for the FOMC committee maybe to allude to the fact that they need to be careful with lowering interest rates too fast, which that sort of talk could strengthen the USD if there's less anticipation of large rate cuts to come. And then again, the fear of war, the fear of a large hurricane kind of goes in the direction of this signal. So this is kind of the process that I recommend you use, and you might interpret the news different, that's okay. But this is the process I recommend that you use as you're using the technical signals or doing your own technical analysis, as we did, to use your understanding and interpretation of the current fundamental news to then go along with your technical analysis so that you trade in the preferred direction as you do your technical analysis. Okay, to find opportunistic entry points in the direction that you already feel like you should trade based on the fundamental news. So the technical analysis is important for finding entry points, exit points, where are the support levels, which direction is the trend, and you hope to find that moving in the direction that you already feel maybe you should be trading based on maybe the most recent headlines and fundamental news as well. Okay. And then again, you can always go back to your trades. You can start to look at what's happening within the trade after you've opened it. You can make adjustments to your stop loss, to your take profit as you see fit as the trade progresses. Okay, and as maybe the news changes as well, as you keep tabs on the headlines the next morning and the next afternoon, etc. if the trade is still running. Crude oil is interesting. With all the tension in the Middle East, there could be fear of disruption of oil supply, and not just out of Iran, but out of other areas in the Middle East that could be disrupted if there's a larger regional war that breaks out. And so, I think I saw a sell signal on crude oil today, and there it is. And it looks like, it's possible in the short term, crude oil is trying to push down as the USD strengthens. The USD has been maybe strengthening a little bit of late, and perhaps this reaches the profit recommendations, the take profit recommendations down here on 71, between 71.4 to 69.2. I feel in the longer term, in the next days or weeks, that if tension escalates in the Middle East, we could see maybe the opposite direction move. So it's interesting from a technical perspective, you might be selling right now on the technical signal, but also you in a longer term type move, mid to long term type move, talking days, maybe weeks rather than months. Maybe you're thinking the opposite direction if you're afraid of escalation in the Middle East, if you think that could bump oil prices up. So let's say rather than looking at the short-term signal to sell here, which is what we've done up to this point with the other signals, maybe we take a look at maybe the opposite possibility with fears of escalation in the Middle East. What could happen with crude oil is perhaps it could spike up. And if you were in that camp that you believe that there could be a retaliation on Iran from Israel, which it's pretty much been promised, there's no guarantee it will happen, but it seems like there's a good possibility that could happen. So maybe you think there could be a spike in crude oil prices as a result. And so if I start to take a look then at the larger candles, I might see this 2-day drop in crude oil as an opportunistic spot to go after a climb in what could be a crisis in the Middle East. Okay, and so if I then draw my price line as to say, as long as it doesn't break today's low, okay, 71.5 or so, as long as it doesn't break below the take profit zone of that short-term signal, then the longer term move might be a buy, okay? Even though we recognize in the short term, maybe it pushes down to that take profit zone still. But this is a pretty big story, or I would say a really big story with what's happening in the Middle East right now and the effect that it could have on crude oil. So if I'm wanting my take profit to not even have to break this high from a couple days back, look at, I have 2 to 3 times the potential profit than I have to risk to get below today's low. Okay, so it's opportunistic, and the fundamental news maybe could be strongly in your favor here for a move on crude oil. So this is what I might deem to be an opportunistic entry point if you think there could be escalation in the Middle East. Okay, and so take profit, I'm looking at 78.4. I don't even have to break the high up here that it was at just 2-3 days back, 78.4. Okay. Stop loss only needs to be below 71.5 to be below today's high. So stop loss, say 71.25. Okay. So I got it below that line here. 71.25 is right about there. Okay, so I'm below today's low. Take profit before this high up here, 78.4, which is so close to that line. It looks like one line, but just below that high without having to break it. We'll just have to test it. Okay, now I like the ratio better than 3 to 1, but I don't like the risk of 11,000 maybe. Okay, so I need to adjust my trade size now. If I go one lot, I'm risking about 1,700. If I go half a lot, I'm risking half of that, and so on. So very easy to hone in on how much I want to risk and what my potential profit is. Okay, so the risk management calculations are done for you by the system. And now I'm looking at approximately 1% risk on my account. And I know I keep using 1% as an example. You can risk the amount you want. That's just an example. Maybe you risk 0.5% per trade. Maybe you risk 2% per trade, or even more or even less. That's up to you. But the point is, this helps you calculate how much you're risking so you're not surprised by it. My example, I usually use as a 1% risk per trade. Doesn't mean that's what you have to do. On longer term moves, maybe you're willing to risk a little more, or maybe you risk less. It's up to you. So I'm going after about 2,000 profit, risking less than 600. And now my trade is in motion. It's in the direction that I feel maybe the fundamental news supports in the coming days. It's in the direction that, from a technical perspective on the one-day candles, is very opportunistic. I've got a support level here that's a third of the risk to get below it, and a resistance level much further away that gives me a lot larger profit potential than risk without having to break the recent high. Okay, so from a technical perspective, it feels very opportunistic, and from a fundamental news perspective, it feels like it's pushing with the wind at your back here to think that crude oil might be able to climb up. Okay, you might think different, and so then you might not make the trade, right? But my point again is not that you need to agree with my assessment of the fundamental news, but that you take into account the fundamental news and you think about how do you feel about it, and then do your technical analysis to see, is there an entry point you like in that direction? Okay, so the two go hand in hand, and I understand this is a technical analysis webinar, but as you do your technical analysis and you look for opportunistic entry points, they probably should be in the direction that you think the fundamental news might push the movement as well. Okay, and sometimes the fundamental news is neutral, and you can just go purely on technical analysis if you feel like there's nothing big fundamentally driving the movement, and then you're purely technical trading and trusting support levels and resistance levels more blindly. But Other times there is fundamental news that can be pretty strong and that can maybe give you an advantage along with your technical entry points and exit points. Okay, and that's just the point that I like to make a lot of times is, using a signal is a tool. It's a trading tool, but using the signal along with other information creates a trading strategy. And typically trading strategies are better than a single tool when you place your trades, because you're taking into account more information than just one thing. And so technical signals, along with your own technical analysis like we're doing here, along with your understanding of the recent fundamental news, that together can build a strategy that maybe can improve upon your win percentage compared to just blindly following signals by themselves, for example. Okay, thank you everybody for attending. We'll see how these few trades carry out over the course of the evening and into tomorrow. Maybe we'll take a look at them tomorrow. I have a session tomorrow earlier in the day, afternoon time. If you want to attend, we'll focus more on the fundamental news. So you're welcome to attend that. It's at 11 a.m. UK time. But we'll see how things go. And good luck with your trading this evening and into tomorrow. I think we'll have some nice movements and maybe some predictable movements based on the fundamental news along with the technicals. But we'll see how it goes. And if you can make tomorrow's session, great. Till then, good luck with your trading, and I hope you make great profits. Bye for now.